Hello, I am Sensei Kevlar. Welcome back to the Dojo. So glad to have you here. Let's take a look at some charts this morning. I'm just going to pull up Bitcoin versus the dollar. And yesterday, in our lesson, we talked about margins using futures. And we talked about how futures are derivative prices, which reflect the market in many ways. In many ways, they reflect the price of the market of the thing that they are derived from. In many ways, they can be different. They can actually have a different price, depending upon where we are in the delivery cycle of the instrument. Now, the reason that I'm pointing this out today is because we can actually do kind of an interesting trick with regards to this information. Knowing that these prices are in fact derived from an underlying market, we can make a comparison. So normally when we go to add something, an indicator or a strategy, we click this button right here. Today I'm going to use the button to the left of it, the compare or add symbol. I'm going to pull up BTC USD, but I'm not just going to go for the regular BTC USD. What I'm going to do is I'm going to look at the OKCoin futures, the forward 3-month futures. I'm going to pull up that chart, the BTC USD 3M. These are futures that are deliverable 3 months in advance. And what you see is you see a price that now overlaps this one. And we're not quite done yet. We got to do a couple things to make this work for us. The first thing I'm going to do is I'm going to come up here and I'm going to see this here, BTC USD 3M from OKCoin. I'm going to click the format button right there, the little gear icon. I'm going to change the style. And the first thing I'm going to do is I'm going to make it a line just to make it easier to kind of see. I'm going to bring that line down just a little bit so it's a little bit thinner. It doesn't obscure things so much. Okay. I don't need a price line. But the other thing that I absolutely have to do, and this is absolutely required, is you have to come down to scale. And you have to pin the scale to the right-hand side. Otherwise, when you move the chart around and when you move your right-hand side axis, these things will not stay aligned and you will not be looking at a valid representation. Now, I want to point out something interesting here. There have definitely been times in the past when futures were highly correlated with the price of the underlying derivative. There are also times in the past when it has become highly speculative ahead of emotion. Okay. I want to point out that here, during this time of really heavy volatility, futures were really consistently above the price. And it was consistently dragging the price up ahead of the market motion. Okay? And then there were other times when the price would spike below the market. Here's an example of the price spiking below the market. Okay? In the times when the price spiked below the market, we generally had downtrends. When the price was spiking above the market, we generally, you see right here, it's above the market. We generally had upward trends. Here we generally had prices below the market, and we generally had downward trends. There's a positive correlation here. When the future buyers think the market is going to up, they tend to buy up the futures ahead of the derivative itself. When they think the market is going down, they tend to sell down the derivative ahead of the thing that's about to go down. That's one explanation. I'm going to give you a different one in a minute, but I want you to focus on this idea for 1 minute. Take a look at back here in the past where, here it went up and then we went up. Take a look at what happened here. Here was a case where we were sort of going up, but futures were very clear that we were trying to go down. And as soon as that closed, as soon as that price closed, action closed, well, guess what? We went down. As soon as the price action above closed, we went a little bit higher. Now, what's happening over here in the future, in the present? Okay. Well, we've had sort of a bit of stability with regards to these markets. Really hasn't done a lot, with a couple of notable exceptions. Like this one right here. After which time we definitely did see a new low. Here we thought the market, could go up, but then as soon as it came back down, we were able to go down again. Here the market was definitely looking for a push upward, but it didn't happen. And here we are most recently. We're coming into November here. All throughout October, prices were below. They were very, very, very consistently below market on the futures. By a noticeable amount. This was the futures traders speculating that Bitcoin was still headed downward. If you had been paying attention to these futures, this could have been an indicator that could have helped you modify your plan to not be buying so much or to be selling more on these types of peaks. When this happens and the futures are like this, man, get out. Get out. Get out and get back in down here. This is such a clear indicator. So, here we are again. The futures actually dropped several days ahead of Bitcoin. If you had been paying attention to this right here and you're going, well, look at futures. Look at futures, look at futures, look at futures. Well, the market's going sideways. Look at futures, look at futures, look at futures. What happened next? Market fell out. Futures knew. Long before the price knew, futures was telling you what was about to happen. Here, futures are way below the price. Market's going sideways, futures are below. What happened next? Below, 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 below. We are in a downtrend. Below, 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 below. More downtrend. Okay. I'm pointing this out because if you're asking what the future traders believe, the future traders believe we still have room to run down. That's evident. That's obvious. That's undeniable. It's scientific. You can test this. That in the past, when future traders believed it was time to come down, we went down. In the past, when future traders believed it was time to go up, we went up. Here's an alternative explanation to what's really going on here. It's a little bit more paranoid, maybe? I think there's some validity to it. Since these traders know how to make 10x, 20x their money on the futures, my guess is what they're doing is they're manipulating the price of the Bitcoin market so they can then make their money on the futures. They're purposefully buying and selling these futures. The whales, the big millionaires who are doing this, they're purposely buying and selling the futures in one direction, down, because they can make 10x on this rather than just waiting for it to go down and buy up. It's a risky game. But if you're able to manipulate the market, if you're able to do something like cause Bitcoin to do this, which, which millionaires are, they can just sell a whole bunch of Bitcoin, then you can make a whole lot of money trading these futures markets and manipulating the market. My guess is that the big institutional players are using margins and trading futures, and they're manipulating, and that's the market that they're really playing. And this, the market that things are derived from, this is their secondary market. This is the market that they simply push around, losing money in doing things like selling right here, selling hard, selling this all the way down in order to make all of their money on the futures. It's a hell of a risky game. But in Masterclass, we'll talk more about these types of techniques and see how that we can apply them even when we don't have money to sell the market down. Anyway, moving on, I really wanted to point out that these futures can be one hell of an indicator. And when they are available as information, they are information that should not be ignored. Let's move on. TRX, BTC. Okay. Here we have a nice situation. Take a look at this. Let's do our fancy schmancy retracement off of this right here. That isn't quite right. Bring this up and over to right here. And we'll see, was the market paying attention to this retracement right here when it was going back up? I mean, it certainly was coming down. These were definitely, measures of those, right? I'd say yes, right here. That's a pretty clear indicator that this line, which was previously respected here, became respected again here, bounced off of this. Here it was resistance, broke through resistance, became support, turned around, hit this line, bounced back down, came through, broke down, came back up to see it again, came back down, came up to see it. Man, we're right here right now. Is this a hell of a time to buy one position and wait for it to come down here with the opportunity to make a lot of money when it does one of these? Of course it is. Make money on this all day long. What do the futures tell us? I just broke things in bad ways. Futures aren't working on... That's too bad. I pulled up a different... TRX, BTC. We're doing Bitfinex. No, we're doing the other one. TRX, BTC. We're doing Binance. All right. So what else can we derive from this? Okay. Well, we definitely had a motion that came up and then came back down to right here. I'd be interested to project that motion into the future. So what we're going to do is we're going to take this one. We're going to take it up to the peak up here. And we're going to take it down to the valley right here. Bunch of valley kids right here. Okay. So what could we expect to see next on this? Well, obviously, this red line is a pretty heavily correlated one, but what about this green line above it? And this one above it? I'd say that these are good targets for long-term prospects, and I'd definitely be making a plan to get myself in heavy on this line right here, because this is where support has been shown over and over again. Right here, right here, right here, right here. That's where I'd be making my heavy plans. And then right there, with the hopes that it's going to sit here and do one of these. So, the problem arises, of course, do I want to just buy one position right here? It's certainly one option. What's something else I could do? Well, if I decided that I wanted to straddle this, and, this here is the range that I'm going to be straddling. Another way of thinking about this is if I know my allocation at the bottom, I could pretend that I had started buying here and I had been dollar cost averaging all the way down, with a plan to keep on dollar cost averaging all the way down to here. Do I have to buy one position here? No, I could pretend that my allocation started here and then figure out how much I really would have bought. The best part about it is in buying it here instead of dollar cost averaging it down. Now, I don't have to pay all of this loss. I can just start here with my dollar cost average. Now we've finally broken out of the cycle of just one, of buying just one buying just one position and then having it go up on us and selling it and making us nothing. We can buy, 30% of our position, 40% of our position, 60, 80, 90, 100% of our position. If this is for 40%, right, here's, 30, 20, 10, 5, 0, right? We want to weight more of it. We want to weight the 50% mark down here and do a lot of the buying down here and not much of the buying up here. So if that's the case, if this is like our 40% mark, because it's like 60% way down the chart, this is our 40% allocation, we'll go ahead and allocate 40% of your opportunity. If you've got, 1 Bitcoin allocated for this opportunity, go ahead and buy 0.4 Bitcoin worth. If you know what you're going to, if you're going to be, what you're going to be doing, if you know that that's what your allocation is and that's how much you need, right? For dollar cost averaging, because the next thing you're going to do is buy 0.4 more Bitcoin down here. Then you're going to buy 0.8 Bitcoin here, right? You know how much you need at the bottom here. We'll go ahead and buy that amount here as if you had bought one position here and had been buying all the way down. Planning. Planning allows you to figure out what the best strategy is for making money without spending any money at all. I know TRX has been on an absolute tear. Let's take a look at REP ETH, because that's been absolutely badonker donk. This thing just went to the moon. Okay, let's see if we could have figured this out. Let's see if we went from here to here and then brought it back down to here, which is pretty clearly a motion that the market is making. It didn't really start anywhere significant with regards to that. But I mean, we definitely could have put some targets here and here, and that would have made us a bunch of money on the sells. But I mean, these are the real targets that we should have been paying attention to, like this blue line right here. Personally, if I was trading this market, I would have probably put like, I would have been 80% out of the market. I would have held on to a 20% as a lottery ticket, just waiting for it to bust out like this. I would have just set a cap that said, you know what, I'm going to consider this my 0, but really I'm just going to hold on to 20% of my position, just in case it does this, just in case it moons, right? But the other remaining 80%, I'm going to sit here and I'm going to straddle it up and down and up and down and up and down and up and down through this whole range right here. Because this is a great range to trade in. Look at this. It comes up here, you make your money, comes down here, you buy in. Come up here, make money, come down here, buy in. Come up here, make money, come down here. I hope you bought in. Right here on this green line. Should have been obvious that that was the time to buy in. Right there on that green line with a plan to buy in again here on this red line and here on this black line. Gray line, whatever. Because here's how you make all your money. If you're not doing this consistently, I'm not saying that there's some magic, way of finding out when the market's going to freaking take off. What I'm saying is if you are not in the market when it takes off, you're not making your money on that market. This is not about timing the market. I know of no good way to time the market and get the timing of the market correct. That being the case, the only way I know how to make money is time in the market. It's not timing the market, it's time in the market, because it needs to do this for you to make your money. You need to be buying down here if you're going to be making your money up here. All right, let's do one more chart. Let's take a look at what ETH/USD is doing. It's beautiful, isn't it? I mean, it just comes right down and it touches this line and gives you the buy, and it comes down here and touches this line and gives you the buy. Every single time, then it comes back up here and makes you your money. Okay. How much money did you make if you had made a plan to buy here and, sell up here? You made 7% on your money every time you did it. 9% on your money every time you did it. I'll take 9% on my money every time. Even if it's just, a portion of my portfolio, I'll take 9% on 1% of my portfolio. Yes, please. I love it. I want to do that all day long. I want to take these opportunities and I want to create them for myself consistently. Right? As for what this thing could possibly do next, let's do a retracement of this most recent motion. Or an extension, rather. A projection. Yes, a projection. Boy, that's a heavily correlated set of lines right there. Comes up right there, comes down right there, comes down to right here. Right where this resistance line right here, right where it just keeps on touching. Okay, look at this line right here. A double correlated on the 2.36 and on the 2.36 of this extension. 2.36 of this retracement is the same as the 2.36 of this extension. That's a heavily correlated price point. What is that? 130 something? Or it's right above 132, 133. I'd be looking for great price action right around here, looking for a turnaround, right? Looking to be buying it up right here so I can turn it around right here. But we would be looking for these opportunities up here. All right, we've got some more. Power, BTC. Good old Power Ledger. It's been a minute since I looked at this. Nice, look at that. Okay, let's see if we could have predicted that. We'll take this high. There's clearly a correlated high. It was correlated 1, 2, kind of touched right here. We'll take this high. You know, we'll bring it down to this low right here, and then we'll extend it on across. Sorry, I wanted to go the other direction. I really wanted to go the other direction. Let's start with the extension. That's what I really want to do. What we're going to do is we're going to take this high. We're going to bring it down to this low. What tool am I using? I got the wrong tool, apparently. Fib retracement. Thank you. Take it from this high down to this low and just extend it on across. That's what we're doing. Okay. This high to this low. And then we're going to make a plan going into the future. Okay. Well, certainly this level was correlated. Certainly we could have made a lot of money selling here and buying here. Selling here, buying here. Could we have made a plan for down here? Certainly. Did we need to? No, because what happened next? It came up and it bounced off of this line right here, which was heavily correlated back here and back here and back here. It then broke through that, came back down, briefly paused off of this. See that brief pause right there in the middle? Before coming on down, crashing on through. Could we be setting up buys right here, and right here, and right here, and right here? Of course we could. Lots of money to be made in a market like this. Now let's do that projection. Okay. Let's say that, it's today. We want to know what the hell am I going to do next, right? Let's just do an extension of this most recent motion. Let's take the most recent low to the most recent high to the new lower low, and we'll extend it out into the future. Okay. Well, certainly this is a heavily correlated level. So is this. So these are good profit targets. If we know our plan coming down, we now know our plan going up. Make us lots of money. RVN, BTC. That's a good one too. Let's take a look at the retracement on that. Yeah. From the highest high to the lowest low, extended out into the future. We clearly had correlations here. We saw it again here. We're seeing it again here. Okay. What about a plan for buying? Well, I mean, we could just start with some support points. What about a extension? If it's coming down, and it comes down to here, and then it bounces back up to here. What can that tell us? Yeah, sure enough, This line right here and this line right here. Well, here's your other two lines for buying in, like this line right here. Is this line correlated? Yeah, of course it is. Comes over here and touches it all the time. Our tools are telling us exactly the plan we need to make in order to make money. Here's all of our selling opportunities. Here's all of our buying opportunities. Plan accordingly. Grin BTC. I'm not sure I'm familiar with Grin. I'm not even sure that it has it. Grin USD. Yeah, I'm sorry I can't do Grin. But I love Qtum BTC. Good stuff. Alright, let's take a look at what's happened in the past. We'll take a nice fib retracement. We'll take it from this way back recent high. Take it all the way down to this way back recent low, much more recent low. We definitely did see heavy correlations on these lines. Definitely. Okay. But we've definitely got, too much dead zone in here. So let's do another one. Let's find that most recent high. That's up here, looks like. Take it down to the most recent low. Extend that into the future. Still not seeing a lot of good information on this. Let's go a little bit smaller on that. Very, very slow sideways market. We'll take this high down to this low. We'll extend it into the future. Oh, there we go. A little bit clearer now. From this high to this low, we've clearly then, from this high to this low, we have then clearly been respecting this retracement. We stopped here. We stopped here, 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 here. Everywhere. Can we make a plan to be buying this down on here? Can we make a plan that includes an extension? Let's do that extension. And it's going to come on down. Sorry, let me do it the other way, because I really wanted to come up. I really wanted to do the extension down. We'll do it from there to here and then bring it on across. Okay. Well, here's our plan going down. This line is obviously a heavily correlated line. Beyond this line, we have this one and this one as well. Right? There's some really good buying opportunities that would be coming up if those things were to come true. We know exactly where those projections are going to occur and where other traders are going to be projecting them, so we can maximize our plan for buying. No matter what happens, the whole point of all of this is that planning allows you to decide what it is you're going to do without spending any money at all. It allows you to decide exactly how much money you're going to make if the chart does one thing, and exactly how much money you're going to make if the chart does another thing. Plan the trade and trade the plan. And that is the way of the trader. I want to thank you all very much for joining me for this charting session, and I'm really looking forward to tomorrow's lesson, which is graduation. We take everything that we have learned, put it into effect using automation against an API on a real account, making real strategies, showing you how it all really gets done in real time. I very much look forward to seeing you then, and good night.